Hello traders and investors, I'm L.A. Little. I'm an institutional advisor, a professional trader, and the author of Neoclassical Technical Analysis. What I bring to the table on a regular basis is 3 decades of teaching and trading experience. Using the methods that I pioneered and have written about extensively, I show you and help you to understand the market via its testing process. I appreciate you being there and helping me to help others in their journey to become successful traders and investors. And so if you find value, like, subscribe, hit your alert button, and share. Hey folks, L.A. Little. I'm going to look at the market, do a quick review here really. It's about 15 minutes before the close. I'm doing this on March 10th. And what I see out here, there's a lot of movement up and down, right? I mean, they got a nice push to the upside. And what I want to bring over is the oil chart, because everything's dependent here on what oil is doing. And if I pop that to a daily, you can see, the huge doji. That was about 120 in the middle of the night. It traded back down yesterday. Now today we make a new low and come back over it. Going to have less volume. That suggests this thing's going to try to pop back up and climb this wall here a bit. If that's true, that's going to be hard on equities. So I think it's worth realizing right now that oil is the determinant. That's what's moving these markets, and as a result of that, we've got some serious issues out here. And let's look at the charts. Now, I had written a piece, put it on SubStack, also tweeted it on X, that really just said, that you really shouldn't get fooled. And what I meant by that was that, we're going to get a bounce. And that was, I wrote that a day and a half ago. I said, we're going to get a bounce, right? But this thing's going to, probably play out or peter out on the way up. So here's the XLF, right? XLF is one of the key ones. This thing broke down. And when it did, it took in, pretty much took the Dow Jones with it. These were the swing point lows that it broke. It tested into that one. Tested it on more volume, and so my suspicion is that it's probably going to continue to bang away at this until it breaks it and comes back lower. But XLF, it's a big weighted sector. If we look at one other sector that's important is the XLK. Now the XLK hasn't broken down. That swing point low is 13374. It got as low as 13499. I think that's the key one, right? If that one breaks, then you got some real problems. But as you can see, this looks very much like the NDX, the NASDAQ. A lot of open candles here. In other words, people just keep coming in and buying this thing. And, that's okay. I mean, that's what happens, right? That's a market. You've got a market that's been going up a long time and has been going sideways now for a couple months. And the result of that has, everybody thinking, well, it's eventually going to reside to the upside. And that's what should happen. But will it happen? Well, that's a different question. Here's the S&P 500. Now, this is a key chart. So you're coming back up. This bar broke, right? And so you broke under this swing point low, that swing point low, and this one. You broke under 3 of them. So as it swung back around and came back up, it tested into all of those. Tested way up here today, right? It's going to close down here. That's not a particularly nice bar. More than likely that says that we're going to probably get some more downside pressure. Now that doesn't mean we can't bump back up in the morning, and it really, again, a lot of it depends on what's happening in the headlines, Middle East, the war thing, oil, etc. But this, if you just look at it and try to look at it objectively, a high, a lower high, a lower high, a low, a lower low, a lower low, lower low, lower low, right? I mean, this thing is going this direction. Doesn't mean that it has to keep going that direction, but typically when you get something going a certain way, it's going to continue that way. If you look at the NASDAQ, or actually let's just look at the NDX. NDX, you've got the same sort of thing where you got those lower lows, lower highs, right? Here's your highs. They are all lower, but potentially this will be another one. We don't know yet. Here's your lower lows all the way down, right? And so you've got the same thing here. Again, look at all these buyers coming in on all these candles. That's That's a lot of buying support. If this breaks to the downside, all these folks are going to have to bail, right? There was a lot of buying in here. So that will be particularly interesting. Now this one does not have a retest regen, and the top of it was here, and it got over it on this bar, so it took it out. And it hasn't broken a swing point low yet, right? These were tests, but they didn't break. But the test came, if I draw this across, and I take that low and draw it across, the test on this low came on higher volume, right, here and there. But you can see that those volumes are slightly lower than this volume. And so they came down, they tested, didn't have the oomph to get it down, right? Swing it around. Come down again, can't do it, swings it around. It's going to take a big push to get this thing underneath here, but that's a danger spot, and that's something you definitely don't want to be caught in if in fact it happens. So what's my take here? My take has been what it has been. Risk reward doesn't favor long positions in general. Yeah, you can pick at something here and pick at something there, but in general, you just need to try to hold cash, stay out of trouble, and wait for a better trade. The better trade's going to come. Ideally, we'll get a flush, and we'll come all the way back down here somewhere on these retest regens that have never been tested. I don't know if that's going to happen. I don't know. I certainly don't think it's going to happen right away. I don't think we're going to get that kind of flush that fast. But that's what you're waiting on, right? The first buy is this test here. You know, it's a well, let me put it in a little different here. I'll show you, and then I'll wrap this up. The first buy is this little area right here, right? That's probably going to be the buy. In other words, it's going to test into here and then try to bounce right back up out of it. And why? Well, because that's a range that has, excuse me, hasn't quite developed yet, but it's developing. And so my guess is they will buy it there. And that would make sense. So, folks, it's going to be a long process. It's going to take a long time here, but this market is trying to work its way down. It's trying to work off all those gains that it had for over a year of nothing but up ever since those April lows a year ago. And, you know, is it going to do it in time? Is it going to do it in time in price? Is it going to do it in price? Well, so far it's doing it in time, starting to do it in price. And we're starting to see the bleed, the weakness in the daily charts hit the weekly charts. You got to pick up on this stuff, right? The market is dynamic. It's always feeding you. And all you got to do is just keep trying to read the charts and keep trying to look at them and say, okay, what's it telling me? And use that information to make decisions. Have a great one. I'll see you next time.